Good afternoon, ladies and gentlemen. My name is Patrick Largier, and I'm the chairman of Quickstep Holdings Limited. It is my pleasure to welcome you to this annual general meeting. I'm advised the quorum is present, and the time is now 2 p.m., and I declare the meeting open. I'm joined today by my fellow directors, Mark Burgess, Chief Executive Officer and Managing Director, Leanne Hayward, Non-Executive Director, Elizabeth Manns, Non-Executive Director, Kim Osley, Non-Executive Director, and also present is Myron Schlotnick, our Company Secretary. Cameron Slapp from KPMG, our resigning auditor, is present online, and also present here in Bankstown with us are Ryan Pollitt and Frank Moon from BDO, our incoming auditor, subject, of course, to approval by shareholders at this meeting. There are no recorded apologies for this meeting. The notice of the annual general meeting was dispatched to members on the 20th of October 2023. I intend to take the notice of the annual general meeting and explanatory statement as read. This is a virtual meeting held online via the Computershare meeting platform. Shareholders, proxies and guests will be able to participate and view a live webcast of the meeting. Shareholders and proxy will also be able to ask questions and submit votes whilst the meeting is in progress. The format of today's meeting will be firstly for me to give a chairman's address and then to consider and put to the vote the proposed resolutions as set out in the notice of annual general meeting. I will propose the resolution, then ask if there are any questions. At this time, questions can only be asked in direct relation to the resolution put to the meeting. A poll will be conducted on all resolutions. After the resolutions, Mark Burgess, our Managing Director, will then present a general overview of the company's current business activities and general strategic direction, and then shareholders will be given the opportunity to ask general questions. Time permitting, we will cover as many questions as possible. Online attendees can submit questions at any time. To ask a question, select the Q&A icon. Type your question in to the text box. Once you have finished typing, please hit the send button. Please note that while you can submit questions from now on, I will not address them until the relevant section in the meeting. Please also note that your questions will be moderated, and if we receive multiple questions on one topic, they might be amalgamated together. To ask a verbal question, please follow the instructions written below the broadcast window. Mark has just opened the how to ask a question slide. I will now present my chairman's address. As indicated in the annual report, financial year 2023 was a year of challenges and delivered a financial performance that was below our expectations and our potential. As flagged this time last year, the first half of financial year 23 was still heavily impacted by the residual effects of COVID, in particular labour shortages and a supply chain that was still recovering from the massive dislocation from the pandemic. It was pleasing to note that the second half of financial year 23 exhibited a much stronger performance as the issues mentioned above receded, but did not completely disappear. The stronger performance has also been consolidated in the first half of this financial year, and we expect the second half of financial year 24 to show good growth in profitability. As far as our core aerostructures business is concerned, we have been focusing on ensuring future machinery reliability. This work has included an in-depth review of critical spare parts. The remaining critical components are anticipated to be delivered and available for use by the end of this calendar year. This delivery is integral to ensuring equipment uptime. We have also been working hard to ensure that we have the appropriate human and other resources to deliver outstanding service to our customers while continually seeking and delivering greater efficiency in the business. We expect that both of these initiatives will underpin a stronger second half to financial year 24. Moving to the aftermarket business, we conducted a detailed business review earlier this year involving all parties, including our suppliers and our customers. This review was highly beneficial for the business as it reinforced that an Australian component MRO facility of this nature was of importance to the local aviation industry. Through this process, our customers undertook to further increase their support for Quickstep's facility in Tullamarine, and there is now significantly more work being won by our aftermarket business. In addition to this increased volume of work, there's also a much more constant flow, enabling a more efficient scheduling of jobs. On the other side of the coin, the recently announced agreement with ST Engineering will support the aftermarket business with further additional work and access to technology. This recent improvement in volumes through our aftermarket business has delivered on our expectations, and profitability for this business is now in sight. I have every expectation that this business will become a significant contributor to Quickstep's profitability in the coming years. Our applied composites business is focused on becoming a globally significant player in the drone manufacturing business. We are operating in a unique niche in this marketplace and are positioned as a highly competent mid-sized player with some patented technology that is ideally suited for high-volume drone manufacture. Our competitors tend to be either very small businesses that have limited capacity or limited systems for high-volume drone production, and on the other hand, very large companies with high overheads and much less flexibility to adapt to changes in the marketplace. As always, in developing markets and technologies, we can only move as fast as our customers move. And whilst the adoption of higher volume drone supply is taking longer than we originally anticipated, we remain convinced that there is a substantial growth in this market and therefore massive potential for us to capture significant share. As has been advised previously, it is the company's firm belief and understanding that to deliver on our ambitions to be a leading global aerospace and composites company, we need a presence in the USA. And to this end, a site has been identified in Wichita, Kansas for this purpose. This site could also support growth in our aerostructures business by providing us with local manufacturing capability in the USA. One of the key priorities for our company is to secure capital partners for the development of this site. So in summary, the priorities for Quickstep over the next year are to significantly enhance the profitability of our aerostructures business, to bring the aftermarket business to profitability, to pursue all avenues to secure both engineering and manufacturing contracts for the drone space, and to secure funding for the Wichita facility, enabling us to deliver internationally on our drone and other leading-edge composites capabilities. While substantial progress is being made on all fronts, I'm looking forward to seeing the benefits of this work becoming apparent in our financial results, which we would hope would trigger a re-rating of the Quickstep share price. Before I finish, I'd like to acknowledge the ongoing safety performance of Quickstep. Safety is a major focus for any manufacturing business, and it's a credit to the whole of the Quickstep team that we have managed to continue to work safely, notwithstanding the considerable operational and business challenges experienced over the last year. I would also like to thank my fellow directors for their contribution, advice, and support over what has been a very challenging period. And finally, I would like to thank all Quickstep employees for their contribution throughout the year. They have tackled a variety of operational challenges during the year while simultaneously continuing to make progress on our substantial business development program, all of which I believe will lead to a bright future for our company. That concludes my chairman's address, and I will now move to the formal AGM proceedings. As mentioned before, voting at today's meeting will be conducted via an online platform provided by Computershare, our registry. And for those entitled to vote at today's meeting, if you have not already done so, please log in to the online voting portal as provided in the notice of annual general meeting, the online meeting user guide, and as provided on the screen. If you're eligible to vote, once voting opens, press the vote icon and all resolutions will be activated with voting options. To cast your vote, simply select one of the options. There's no need to hit a submit or enter button as the voting automatically is recorded. You will receive a voting confirmation notification on your screen. You can change your vote up until the time I declare the voting closed. Following confirmation by Computershare, the final poll results will be announced to the ASX later today. If you have lodged a valid proxy form, either in hard copy or online prior to the meeting, you do not need to vote again during this meeting. Your votes will have been recorded and are included in the proxy results. Before any resolution set out in the notice of annual general meeting is put to the vote by members, the total votes of proxies that have been received or by or on behalf of the company or before the deadline of notice in the notice of annual general meeting in relation to each resolution will be set out on your screen. I now declare voting open for all items of business. The poll is now open, and you may cast your votes while we go through the formal business section. It is intended to keep the poll open until after our Managing Director's presentation in order to give you time to lodge your votes. Please note that in relation to all open proxies, I, as Chairman, intend to vote in favour of all resolutions. The first item of business on the notice is to consider the financial statements of the company for the financial year ended 30th of June 2023, together with the declaration of the directors' report, the remuneration report, and the auditor's report. I ask that any questions and discussion are confined at this stage to these documents and the conduct of the audit. There will be opportunity later in the meeting to ask questions of a more general nature. Any questions? Please submit your questions using procedures described earlier in the meeting. Mark, are there any questions?
There are no written questions. Are there any questions on the phone?
There are no phone questions at this time.
I will now move to resolution 1, which is to consider and if thought fit to pass the non-binding ordinary resolution. The resolution is that for the purposes of section 250R(2) of the Corporations Act and for all other purposes, the remuneration report as contained in the company's director's report for the financial year ended 30th of June 2023 be adopted. The results of the proxies are shown on your screen. Does any shareholder have any questions or comments about the remuneration report? If you have any questions, please submit them using the procedures described earlier in the meeting. Any questions, Mark?
There are no questions relating to this resolution via text. Are there any phone questions?
There are no phone questions at this time.
The poll is open and you may cast your votes on this resolution in the manner described earlier. I will now hand over the chair to Leanne Hayward for the purposes of resolution 2.
Thank you, Patrick. I move to resolution 2, which is to consider and if thought fit to pass an ordinary resolution that Mr. Patrick Largier, a director of the company who retires by rotation in accordance with clause 13.3(b) of the company's constitution and offers himself for re-election, be re-elected as a director. Patrick will now introduce himself briefly.
Thank you, Leanne. My bio is in the notice of meeting, so I won't repeat it, but just make a few very brief points. Much of my life has been spent involved in turning around and growing international businesses, and over the period have achieved considerable success with this. I was attracted to Quickstep because I could see huge scope to build a globally significant business, and I still do. Our strategy is clear. Our execution has been a bit slower than we'd hoped for a variety of reasons, both internal and external. I firmly believe that potential is still there as we move from strategy to execution, and I remain entirely committed to make a huge success of Quickstep At a final point, I'm personally still a very firm believer in Quickstep, and I've put my money where my mouth is, as it were, and our personal money on the line by buying considerable number of Quickstep shares over the past few years.
Thank you, Patrick. The proxy results for this resolution are shown on the screen. Does any shareholder have any questions or comments about this resolution? If you have any questions in relation to the resolution, please submit them using the procedures described earlier in the meeting. Are there any questions, Mark?
There are no written questions for this resolution. Are there any questions on the phone?
There are no phone questions at this time.
The poll is open and you may cast your votes on this resolution in the manner described earlier. I'll now hand the chair back to Patrick Largier to continue the meeting.
Many thanks, Leanne. Now we'll move to resolution 3, which is to consider and if thought fit to pass an ordinary resolution that Mrs. Elizabeth Manns, a director of the company who retires by rotation in accordance with clause 13.3b of the company's constitution and offers herself for re-election, be re-elected as a director. Elizabeth will now introduce herself briefly.
Good afternoon, and thank you for the opportunity to briefly introduce myself. I first joined the Quickstep board in August 2019. I'm currently the chair of the Remuneration, Nominations and Diversity Committee and a member of the Audit Committee. I am an experienced director and have broad general and operational management experience gained through an international career in industrial and FMCG companies in both Australasia and Europe. My most recent executive role was Executive General Manager of CHEP Australia, which is a wholly owned subsidiary of Brambles. I have now retired from this role and from my full-time executive career as of January this year. I am a graduate of the Australian Institute of Company Directors, a chartered engineer, and a fellow of the UK Institution of Mechanical Engineers. Quickstep is no doubt operating in a dynamic and changing industry that is not without present challenges. I believe that the skills I bring to the board, which include business strategy, supply chain excellence, and people and culture, will continue to support the long-term sustainability and growth of your company and to drive a culture that is built on diversity, agility, and commitment to this industry. I therefore do seek your support for my re-election today. Thank you.
Thank you, Liz. The proxy results for this resolution 3 are set on your screen. Does any shareholder have any questions or comments about this resolution? If you have any questions in relation to the resolution, please submit them using the procedures described earlier in the meeting.
There is a written question that came in late related to the second resolution. Same question for this resolution. The shareholders asked, how has the largest shareholder of Quickstep voted in respect of these resolutions? I'll take that happily, Patrick. It's a confidential voting process. We are not aware of how individual shareholders vote, nor would we ever seek or disclose that information. Are there any questions from the phone?
There are no phone questions at this time.
Thank you. The poll is open and you may cast your vote on this resolution in the manner described earlier. Resolution 4, which is to consider and if thought fit to pass an ordinary resolution. The resolution is that for the purposes of ASX listing rule 10.14.1 and for all other purposes, approval is given for the grant to the Managing Director, Mr. Mark Burgess, of 567,739 rights under the Quickstep Incentive Plan as described in the explanatory statement. The proxies for this resolution are now on your screen. If any shareholder has any questions about this resolution, please submit them using the procedures described earlier in the meeting.
We have one text question relating to this resolution Chair. Why are rights issued for no consideration under the incentive plan? This is extremely dilutive on all shareholders, especially when the share price is currently so low.
Do you want to take that, Liz? Or, no, I'm happy to take it if you want to. Thank you for the question. There are many ways of providing long-term incentives to key management staff. And in the end, as is declared in the financial report, these rights are allocated a certain value and are part of the remuneration report. Some companies use rights, some companies use options, and in many ways, options are much more dilutive than rights. It is the scheme that Quickstep has chosen and has used for a number of years. And as you would see when you read the notice of meeting, there are a variety of performance hurdles that need to be fulfilled before any rights are issued. Any other questions?
Are there any questions from the phone?
There are no phone questions at this time.
Thank you. The poll is open and you may cast your votes on this resolution in the manner described earlier. I'm now moving to resolution 5, which is to consider and if thought fit to pass a special resolution. The resolution is that pursuant to and for the purposes of ASX listing rule 7.1A and for all other purposes, shareholders approve the issue or the entry into agreements to issue equity securities representing up to 10% of the issued capital of the company, calculated in accordance with the formula prescribed in the ASX listing rule 7.1A.2 on the terms and conditions as set out in the explanatory statement. The proxies are shown on your screen for this resolution. If any shareholders have any questions, please submit them in the manner described earlier in the meeting.
There are no text questions relating to this resolution. Are there any questions on the phone?
There are no phone questions at this time.
Thank you. The poll is now open and you may cast your votes on this resolution in the manner described earlier. Moving to resolution 6, which is to consider and if thought fit pass an ordinary resolution. And that resolution is that for the purposes of the ASX listing rule 7.2, exception 13B, and for all other purposes, the Quickstep Incentive Rights Plan and future issues to eligible employees under the Quickstep Incentive Rights Plan from the date of this meeting for the next 3 years, as described in the explanatory statement, be approved. You will see the proxy votes on your screen at the moment. And if any shareholders have any questions, please submit them in the manner described earlier.
There are no text questions relating to this resolution. Are there any questions on the phone?
There are no phone questions at this time.
The poll is open and you may cast your votes on this resolution in the manner described earlier. Now moving to resolution 7, which is to consider and if thought fit pass an ordinary resolution. And the resolution is that subject to the consent of ASX being received by the company for KPMG to resign as auditor of the company for the purposes of section 327B(1) of the Corporations Act and for all other purposes, BDO Audit Pty Limited have been nominated in accordance with section 328B(1) of the Act, be appointed as an auditor of the company. The proxies are on your screen. If any shareholders have any questions or comments on this resolution, please submit those questions or comments in the manner described earlier.
There are no text questions related to this resolution. Are there any questions on the phone?
There are no phone questions at this time.
The poll is open and you may cast your votes on this resolution in the manner described earlier. I will now hand over to our Chief Executive Officer and Managing Director, Mark Burgess, to provide a brief overview of the company's operations and strategic direction. The poll is still open and you may cast your votes during the presentation.
Thank you, Patrick. Thank you, Chair. Good afternoon, ladies and gentlemen. It gives me great pleasure to be with you today to discuss QuickStep's progress over the last 12 months, our multi-segment strategy and the business outlook. The challenges we've experienced over the last 2 years and to which the Chair earlier referred have been well documented. I don't want to dwell on those any further today. Today's focus is about the pursuit of meaningful growth in areas where we are well differentiated, aggressive cost and price management, deep customer engagement, and a return to profitability this year. That will form the basis of today's presentation. The pivot to scalable best athlete markets that's been underway over the last 2 years is gathering pace, and hopefully you will see that as I continue. QuickStep is Australia's largest independent aerospace and composites business. We've grown strongly throughout our recent history. We operate, in particular, we've grown strongly in a domestic market with very limited demand. We operate in a highly competitive global market, but also one where every segment we operate in has strong and persistent tailwinds. Hence the title, as you can see on the screen, of today's presentation, as it was for our annual report, Global Growth. We have almost 300 incredibly talented, highly qualified, and dedicated personnel delivering clever composite solutions to our customers every day, all around the world. The business is strong in structures and services, and the engineering, manufacturing, and industrial processes that support these end market segments. I'll return to the business outlook at the end of this presentation, but we reaffirm our previous revenue guidance, which continues to exhibit strong growth and a return to positive profitability this year with positive EBIT forecast, which is not lost on any of us that this is a vital consideration for myself, for the board, for the management team, and clearly for you as owners of the company. The segments we operate in across structures and services have very large total addressable markets, a tailwind in itself. And we have tailored offerings in each of those segments. In drones, we support early stage design and engineering. We have a unique and patented production system to bring products to market at rate and cost. And we're developing our own products in drone systems around propulsion, payloads, and other subsystems. In clean tech, we're pursuing the electrification of flight. Watch out for some exciting demonstrations of that over the next 2 months, with a focus on hydrogen fuel cell propulsion, hydrogen storage, and the like. We also are focused on emissions reduction in the commercial aviation space through our aftermarket business, through expanded onshore capability for very large structures that are traditionally flown all over the world by air cargo, as well as more efficient repair and upgrade methodologies to extend component life. In more traditional aerospace structures, we continue to perform very well on complex, high-profile aircraft programs, and we are successfully positioning the business to be a key supplier in a number of defence programs, but in particular in the Commonwealth's guided weapons enterprise. These are all underpinned by deep industrial engineering expertise and a reputation for high quality, high volume composite supply. In services, we continue to grow our business servicing the commercial airlines industry in our region, and increasingly with military customers. This business will demonstrate strong year-on-year growth this year, and we are working toward break even during the course of this year after well-reported substantial losses of last year, to which the chairman earlier referred. And we anticipate ongoing growth and performance improvements thereafter. As an Australian business, in a highly competitive global market where geography and supply lines can often count against us, to be successful, we have to be differentiated. In new segments, we offer the investor aggregated risk. We offer customers depth and certainty. You don't need to pick winners. We work across industry segments to aggregate investment risk. We offer a unique bridge across the Pacific with more than a decade of quality and delivery performance in the US market in particular, underpinning our brand reputation there. We've developed and continue to develop proprietary manufacturing processes, and we have extensive real-world programs with leading research and development institutions both here, such as DMTC, Deakin, RMIT, and UNSW, as well as with industry partners overseas, in particular in the United States. We have all the components of a successful aerospace company. We are broad and deep, yet remarkably agile, an exciting combination. In our opinion, this makes us pretty unique in the Australian-owned aerospace and defence environment. And so why, in our view, should you consider Quickstep as an attractive investment proposition? I've already referenced, but we have an enviable reputation in defence aerostructures, and we provide somewhat unique exposure as a listed business in this context to growth in defence expenditure on both sides of the Pacific, specifically across the Australian and US markets. This positions us well for continued growth, and important to note, scale in the tier 1, tier 2 sector of our supply chain is a significant contributing factor to higher levels of profitability. We are, as has been referenced, emerging as a highly competent and sought after and quite rare tier 1 engineering partner and supplier in the nascent drones segment. This gives the investor exposure to a market that we believe is set to explode over the next few years, and as mentioned earlier, aggregates the risk of a brand new product segment. We consider ourselves to be really the best component MRO in this part of the world, with many unique capabilities, maintenance, repair and overhaul being MRO. Offering rare listed exposure to a resurgent regional aviation market and increasing preference for local capability within the airline industry, and increasingly seeing more substantial defence work emerge, in particular with the Asia pivot that the US is undertaking and the quantum of assets that need maintenance, repair and overhaul from that customer community in this part of the Indo-Pacific. Our revenue growth over the last decade or so has, in our opinion, been impressive. We are in a quite elite club of advanced manufacturers who have experienced average growth rates over a prolonged period of time in excess of 50% compounded annual. Over the period of my tenure from financial year 18 that you can see on the screen in front of you, we've moved from a period of sustained losses and negative operating cash flow into a period of profitability and positive cash flow for the first time in the company's history. But as you can also see from this chart, revenue growth plateaued recently, and profitability has never been at the level that I, the board, or the management team deem acceptable. The response to this has been a period of significant investment in product and process innovation, portfolio diversification, and multi-segment growth. As you can see on the chart there, representing more than $15 million over the last couple of years. Building new businesses in aerospace and defence takes time and costs money, especially when we consider the impacts of the pandemic and its disproportionate impact on a number of segments, including the aerospace industry. That combination of investment, as well as the operating environment, has created a significant drag effect on short-term earnings. That said, during the last financial year, we also booked record order intake and hit a record order backlog in excess of $250 million on revenue that was essentially 95% defence. This year, we forecast continued growth in the business, but we will grow much more quickly in the new business segments, such that our revenue will grow in FY24, but will be closer to 85% defence derived over the course of the current financial year. We have an aggressive programme of work to deliver not just a return to profitability this year, but improved structural profitability over the short, medium and long term. The more than $15 million we've invested in growth over the last couple of years is a very significant sum for a business of our size. It has, as you've seen, contributed to a pullback in the profit trend that we saw in the prior 3 years, but it's been an essential element of investment in the future of your business. Strong earnings are rarely the hallmark, in my experience, of static or stagnant aerospace and defence businesses, beyond perhaps very short-term measures of convenience. We are seeking to build long-term sustainable growth. As you can see here, the actual and forecast compounded annual growth rates in our new business segments has already been quite impressive, admittedly from a relatively low base, but we expect them to continue to exhibit strong growth. The chart you can see here gives you a view of the revenue mix by business segment and geography over the coming years. The projected growth is born very much of the investment bias I've just spoken about, and there will be continued investment on the back of profit growth, which I'll come back to in a moment. You can see clearly from this chart the increasing importance of services, as well as the medium-term transformational effect of our investments in the US market. Who delivers this? And I really do want to dwell on the people behind the brand. That's who delivers performance, even in the toughest of times. In my view, we've got an excellent leadership group for a business this size in this market. A leadership group that's been almost completely refreshed over the last 24 months. They are motivated, experienced, and global in outlook. The team is supported by nearly 300 employees who, as you can see on the slide there, have tenure. They have pride and commitment in what they do and doing it from an Australian base. And we can also boast an incredibly diverse workforce and one with an exceptional 80% or greater possessing advanced qualifications. All of these features, in my opinion, are the hallmark of an advanced manufacturing business and one that can be successful globally despite the constraints of the Australian domestic market. We have an ambitious 5-year plan. It requires ongoing investment. We expect it will deliver strong and sustainably improved profit. How will we do this? We're going to incrementally grow our structures business here and internationally, in particular through some of the defence opportunities that I referenced earlier in this presentation. We are already in active discussions with a number of customers in that respect. We will continue to scale our aftermarket business. As I mentioned, this year is a key transition year for that business from a revenue and a margin perspective. We've added new talent, we've invested further, we've developed much deeper customer relationships and approached the market more broadly, and have the notable achievement of some key industry partners, both domestically and offshore, in particular the ST Aerospace relationship. Importantly, we will focus on expansion in the US through our new presence there. We will seek to back this by existing customer contracts in drones and other parts of our business, a strong pipeline of new work, and explore or continue to explore with our existing defence customer base, organic and potentially inorganic opportunities in that market, that being the world's largest defence and aerospace market, equivalent in size to the whole of the rest of the world put together. We see, particularly in the US, a significant opportunity space due to some of the failings of the industrial supply chain, in particular in the composite space, and our ability to take our credibility and past performance into that market to ensure that we are successful in winning new business with existing and new customers. And we will seek to leverage the increasingly large amount of government support on both sides of the Pacific dedicated to the clean tech space. In conclusion, the outlook for QuickStep, in my opinion, after 2 really challenging years, is very positive. We reaffirm our revenue guidance for FY24 in a range that you can see on the screen there of 103 to 106 million, which represents annual growth of more than 10%, with, as I've said, the majority of this growth coming from new segments. We expect to see continued growth over the midterm and new contract wins targeted within the financial year. We will continue, as I've said, our focus on the importance now and into the future of the US market. We are obviously managing cost and pricing aggressively to maximize profit in the near term. And we, as I mentioned, expect to return to profitability this year with positive EBIT across the group for the full year. And we will continue to pursue new business opportunities of scale with attractive margins, driving an improved customer portfolio and margin mix, and in order to drive sustained long-term earnings growth. I appreciate your attention and engagement today. With that, I will close, hand the chair back to Patrick, and move on to questions.
Thank you, Mark, for your presentation. And I'm now going to move on to open the floor for any general questions or comments. If there are any general questions or comments about the management of the company, please submit them now using the procedures we have described earlier in the meeting. Are there any questions, Mark?
There are several questions. I will probably join you up there and we can take them one by one.
Okay.
Are there any questions from the phone?
There are no phone questions at this time.
Okay, so first question from a shareholder. You are forecasting 30% growth, but with lagging profitability and a low share price. How will you fund this growth without diluting shareholder value through a share issue?
You can have a go and then I'll add something.
Okay. So as you've seen through the course of the presentation, we're working to drive improved profitability across the group. That in part will start to strengthen our balance sheet and our investability. I'd break it down by the operating segments that we're in. In aftermarket, we've got significant operating leverage associated with that facility. The facility itself can do probably 4x the revenue that we're forecasting for this year, and this year will grow by more than 2 times over the previous year. So no substantial investment to grow that part of the business. In aerostructures, we will seek to maximise government, that's Australian federal and state support, but also US DoD investment support for new programs with a maximisation of their investment in the non-recurring elements of those programs. For drones, again, and in terms of the contracts that we've received so far, in most cases, the engineering design development phase has been funded by our customers. There is no doubt beyond that, residually, a requirement for further investment. But that investment will be commensurate with the opportunity, preceded by ideally a return to profitability, as well as then an increase in the business winning machine within the organisation, such that we can ensure we meet our capital needs across government support, debt, our own balance sheet, free cash flow, and equity.
I don't have anything further to add to that.
Let me just get back to the front of this. Okay. Given the long history of losses and an 80 to 90% reduction in shareholder value in the past 3 years, can you provide a better understanding of why your strategy will deliver profitable business rather than just larger business? So I'd refer to some of the comments that I've made in the presentation. I think in most areas of the world, measuring a company's performance that operates in the aerospace and defence industry over the COVID period is a difficult period to make a rational assessment of that business's performance. In most markets around the world, I think the aerospace and defence sector is well understood to have been heavily impacted by the pandemic. We were no exception to that, particularly last year. We will continue to build our business winning pipeline. We will continue to drive towards the profitability that we've spoken about, and we will continue to pursue an improved mix of customers within the portfolio and margin mix within the portfolio. From our perspective, the share price as it currently stands is not reflective of the inherent value of this business. But what we have to do is we have to demonstrate to the market why we believe the inherent value of this business is greater than the share market assigns to us. That's obviously a long journey. It's obviously it has been impacted over the last couple of years by the COVID pandemic. And I know I keep making reference to that now, even though I said earlier I wouldn't. But I think in aerospace terms, it had a profound effect on the global industry, including Australia, and nobody should forget that. So we will work along all of those lines of development, more astute pricing, aggressive cost management, return to profitability, additional business winning to drive enhanced volume, but with a better mix of customer segment and margin to deliver not just revenue growth. And as you can see from the chart that we showed earlier, the revenue growth has been very impressive. But even in those years when we were making profit, the level of profitability for this business was not where we wanted it to be, nor where we believe our shareholders want it to be. And that will be a key focus going forward. I don't know if you've got anything to add.
Yeah, in addition to what Mark has said, I think we should note that over the last few years, we had our core aerostructures business has been continually quite profitable, and we have been redeploying much of that profit and cash flow into developing 2 new businesses. And the reason, and so those businesses have, and we've done some segmentation in the various analyses and presentations we've made, have consumed a fair bit of the profit of the business. But as we have indicated, and as Mark has laid out in some detail, their aftermarket business, we expect to move towards profitability in the nearish term. And so a lot of that has been actually investment and growth, and has ultimately reflected in lower reported profits, and that growth has been seen in the top line as well. So I think there is quite a bit of reinvestment in growth rather than just not making a profit.
Yeah, good point. What strategy are you adopting around exposing QHL to the investor market, roadshows, investor days, brokers reports, etc., etc.? The current lack of demand around buying QHL stock has been poor. I'll start, and if you want to jump in then. We traditionally have always focused on 6 monthly analyst calls, which are also open on a listen-only basis to all shareholders, actually. They've traditionally been pretty well attended. There is, of course, the annual general meeting that we're holding today. And we do roadshow, particularly around the half and full year results period. I think in terms of the The stock price as it stands right now, I think, as most of you will be aware, it can be moved by a purchase of literally one or two shares by 1 or 2%. And that's a reflection of the current valuation, but also the thinly traded nature of the stock. So we have a lot of work to do to improve our underlying performance and ensure that we can pitch successfully everything that we've talked about today and move that share price, as well as the liquidity in the share, back to where it was ideally pre-COVID, and certainly where it was 12 months ago. So there's a lot of work to do. It's extremely difficult to embrace all shareholders. We still have about 25% of the shareholder base is institutional investors, and there is ongoing communication across the institutional base, whether they're shareholders or not. The retail base is notoriously difficult to engage with. It's very dispersed. You know, there are 4,500 other shareholders on the register. They all have differing interests. There is no median message for them apart from win business, make money, grow. And that's what we're going to focus on.
I don't have much to add other than we are focusing on obviously delivering better results. And as I mentioned in my address, a lot of the work we've done over the last couple of years hopefully will find its way into the financial performance of the company and support the share price and support the interest in our stock.
Next question, is MRO now profitable, or when will it be? I think we've touched on that. The target for this year is to get to a point of break even by the end of the year. No, not profitable yet, but expected to be so toward the end of the year, with a full year performance that is break even, with again substantial year-on-year revenue growth. But as I said in my presentation, a very important transition year for that business. But again, that business, there's a lot of operating leverage within that business. We want to continue to grow that business and focus both on top line growth, the mix, and the bottom line performance of that business. But certainly, as far as I'm concerned, it's a real turning point year for that business.
Thank you. Nothing further to add.
Is profitability this year net profit or EBIT positive? Well, as we said in the presentation, the guidance we provided is EBIT positive. Tell us about your own drone development and target markets and expected demo dates. Yep. So in terms of drone developments, they're relatively they appear very diverse, but they're actually centered around the same kind of capabilities. So we work with existing customers. All of those contracts have been announced previously to provide engineering support at the front end, and in particular design for manufacturing support as those businesses seek to scale, as well as then the production of those airframes. Part of the work that we're doing at the moment, and we will be communicating more on this over the course of this year, this financial year, is on hydrogen propulsion systems. So I referenced a demonstration that you will see in the media over the next couple of months. That will be a hydrogen powered hydrogen fuel cell powered drone, a derivative of an existing drone that will demonstrate this year. We announced the TB2 relationship. We think payloads in drones is going to be an extremely important subsystem. So we're continuing to support that business in its growth, and in a corresponding way, our growth within that, with that business as a partner. Additional to that is we've been able to aggregate across the industry, across a lot of startups, and in particular with end users, between, you know, not being a large aerospace company with large price tags, but having the breadth and depth to be able to provide an aerospace solution to an end user, but by working with smaller businesses with specific skills and capabilities around their product technology. We can aggregate that into a package that satisfies the needs of the end customer, that leverages some of our own development, whether that be on the propulsion side or the payload side, to deliver them a modular drone system that reduces the training burden, reduces the logistics burden, and gives them multi-mission aircraft. There's a lot of work going into that at the moment. the focus is very much on the United States. That opportunity is an opportunity essentially in the US rather than domestically. But again, during the course of the next 12 months, we will hopefully be able to talk to you in more detail about that. Okay. I believe there's a holder on the phone who wants to ask a verbal question. Can you please direct that verbal question to us?
Thank you. We have a question from Vishal Kelkar. Please go ahead.
Yeah, can you hear me?
Yep, go ahead, Vishal.
Yep. So the share price of Quickstep Holding has declined by a whopping 75% last 5 years. And in the last 10 years, the share price of the company has dropped from $2.16 to 23 cents today. None of the directors in the board have any significant personal investment in the shares of Quickstep. Mr. Largier, the chairman of the board, acquired most of the shares only 7 months ago when it touched the lowest point, about 23-24 cents in March. The CEO of Quickstep, Mr. Burgess, has personal investment of only 60,000 shares, excluding performance right, obviously. And if MRAW Superfund and MAR Trust shares are included, the shareholding is, in my opinion, meager 480,000. None of the executive management of the company, the likes of CFO or CEO or company secretary, has any significant shareholding. Don't know whether they trust the future of the company they work for. The AGM presentation, yes, it does show bold goals in revenue growth, but does not show any strategy in getting towards the goal of becoming a profitable company. And that's basically the cost control. Instead, there is an announcement of burning the current cash to set up the factory in Wichita, Kansas. So in light of the above, how are you going to assure the shareholders that the company will perform better in future and the share price will not decline but incline?
Thanks, Vishal. So I'll start and fill in the gaps where necessary, Patrick. I'll start with the point that Patrick made just before, right? We've invested a 15 million or more over the last 2 years or so in growth in this business. And if you look at the financial charts that I showed earlier in terms of past performance, you can see why, right? We had a very long period of very substantial growth, then a plateauing effect. Profitability for the business, we arrived at profitability and positive operating cash flow, but not at the extent that we believe is essential for the health and well-being of a business like ours. So we've reinvested some of our profitability in growth. Sadly, that came at the same time as the absolute black swan once in a 100-year event of the pandemic. That put a lot of pressure on the business. But the reality is we've come back to stability. We're forecasting a return to profitability this year. And in terms of and I'll say it again in really kind of one-liner terms, right? Volume growth is an important component of profitability in a business like ours. Aggressive cost control is an important driver of profitability. More astute pricing and value-based pricing is an important component of profitability in our business. And a better customer portfolio mix and the associated margin mix that comes with that are also really important features of driving improved profitability. So the way the management team and the board look at this is we have an immediate issue, which is let's get the monkey off our back of the last 2 years of heavily pandemic affected operating conditions and crappy financial performance, move to a point of returning to profitability this year, but also push on all of those other levers so that over time, and when I say time, I mean over the next 1 to 2 years, you are on a much improved, sustainable, structural profitability path, which is where, frankly, and if you look at the charts, is where, frankly, we were just pre-COVID. So we need to get back onto that path and drive continued operating leverage, improvement in cost base, improvement in many aspects of the business to drive sustainable long-term profitability. But the aerospace and defense manufacturing industry, particularly on the back of black swan events, does not generate gargantuan profits overnight. It's not that kind of industry. It takes time to build, and it takes time to build a revenue base that will deliver the outcomes that we're looking for in terms of profit. So I hear there is a clear an urgent need from our point of view to return to profitability for this business, which we will seek to do. But we also have to continue to develop the capabilities of the business and grow. With regards to the share ownership, there is no obligation beyond for the non-executive directors for share ownership. I don't think it reflects any lack of belief in the business. I think these things are a personal choice. I don't agree that that my ownership or those of others that you referenced is quite as meagre as is claimed. There's a pretty unreasonable tax regime in Australia for starters. But Patrick,
thanks, Michelle. Thanks for your question. The other additional comment I would make, or not additional, but really supportive comment to Mark's response is that Quickstep is really three businesses. It's got the mature aerostructures business, which has, as I mentioned earlier, remained profitable throughout. That is a business that we are aiming not only to grow, but to run more efficiently and to boost its profitability. The other two businesses, the aftermarket, which we've spent a fair bit of time talking about, we've invested, as Mark indicated, a lot of money over the last few years. We clearly see that business growing very quickly, and we have good line of sight to profitability. And then the applied composites, again, we are building a very strong position in the global industry, but the actual our customers, their rate at which they are ordering and building drones has proven to be a little slower than we first thought, and I think that's completely normal in new markets. So I and we as a board are pretty confident that the future is an inclining, improving share price rather than a declining one. And as I say, we are moving from a strategy which we've been working on for the last 3 years, executing, and we can really see the improvement coming in the coming years.
Thanks, Patrick. The final question that we've got by text: how do you intend to fund the 3 to 5 year $660 to $100 million investment requirement? I'll touch back on a comment I made earlier. It really, and this is the wonderful response, right? It depends. There is a significant capital requirement to deliver a significant outcome, but we will only seek to raise capital against really strong business cases, and the sources of those funds will be one of three macro sources, right? Either, and we will maximize government support, whether that be here or in particular in the United States, where there is a significant amount of government support available for new ventures, debt and equity. The blend of those macro solutions will be predicated by the specific opportunity, the considerations within the business case, but only underpinned by a logical, rational, and attractive investment case that is accretive to the business. So, I think from my perspective, we've successfully raised capital in the past against very significant contract wins. That's a pretty good model for the future. So, secure business, fund it from an optimum mix of those things that I've mentioned.
Thank you, Mark. Does that bring us to the end of all the questions?
It does.
Thank you. I would like to thank shareholders for submitting the questions. It's actually always, especially in these online meetings, it's always good to get some feedback because we're talking to a microphone and a camera. So thank you all. And I'm hoping that we have answered the questions that you posed in a way that has sort of satisfied your interest. So thank you very much. That's really, and that now concludes the question section of the meeting. We're about to close the voting on all resolutions, and I'll give you, we've probably had quite a while, another 10 or 15 seconds if anyone has a last minute vote to make, and then we will close the voting. So just a few seconds and then we'll do that. I think we can probably close the voting now. I would imagine we've had enough time to vote. So the vote, I now declare the poll closed. After the votes have been counted, the results of the poll will be released to the ASX later today. The company has not received any notice of any other business, and so that concludes the formal part of today's meeting. And I'd like to thank everyone for attending, and given there's no other business, I now declare the meeting closed. Thank you for your attendance, and we look forward to your continued support.